Good afternoon. In this video, we're going to go over this past week's trades in the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, this past week, I finished with 11 wins and 1 loss for a win rate of 91.67%. Very pleased about that, especially being a short week and being the first of the year. So very pleased to start the year out that way. So with that said, I'm just going to jump right into it. Traded his room on the 26th, the 29th. I said SPY calls over 689. Just make sure my mic is working. 689 on the 29th is right here. Did I say calls? Yeah, calls. 689 because we're gap down. 689 is up here. I really chose that really far up here. That's because I called it at 9 o'clock, which when it was right here. And then it dumped. Yeah, so. Anyways, first 10-minute candle, it popped on these big gap downs and gap ups. I'm looking at the opposite opening now. We gapped down from what, 690 down to right about 687. So we gapped down about $3 or $4. That's a pretty good size gap. I mean, it's not huge, but I mean, it's a good gap down. I'm usually, when we gap down, we pop it open because everyone and their mother is going to jump in puts at opening thinking that we're going to flash crash, the end of the world's happening, all the fear mongers, and yeah, so that's why SPY pops it open. And when we have these monster gap ups, I'm looking for an opening dump because everyone and their mother thinks that we'll go into the moon, and people, these retail traders are just, they're so blind and they don't see the games. And so they jump into calls on the gap up thinking we're going to go to the moon, we're going to go up forever. SPY does not go up forever, even though it does seem like it lately, or it slow grinds, but it does pull back. I mean, even if it's like a 10-15 minute pullback at open, we're going to usually pull back. So 95% of the time when we have a huge gap down, we're going to pop it open, or we have a huge gap up, we're going to dump it open. That's pretty high statistic. Very rarely do we have a huge gap up and keep running, and same with the gap down. I mean, it does happen, but it's pretty rare because market makers know that everyone's going to jump in blindly and they're going to rip it the other way to get everyone stopped out, take everyone's money. Then they're going to either continue going with the gap down or the gap up. So they just want to shake the tree a little bit, shake the tree, shake traders out. I don't know why I said shake the tree, but whatever. I mean, I guess if you shake the tree and they're in the tree, they're going to fall out. So I know, poor analogy, but whatever. Now, first trade I took puts at 10 o'clock, 10:06 actually, and I do not like taking the first half an hour of the trade, the first half an hour on the day. For some reason, I can't speak right, so apologize in advance. Probably tired, but anyways, our first trading day of the week, which is this Monday, obviously for this particular day, I wait out a half an hour because that's when you see the most action, because you have all the news and from the weekend and pre-market, and it's got a lot to digest, and a lot of people aren't trading for the weekend, so when they jump in, there's just a lot of head fakes and chaos the first 10, 15, 20 minutes. And I used to wait out the first 15, 10 minutes at open, especially on Mondays, and they've been too many traps, so I've been making it a rule that the first trading day of the week that I wait out the first half an hour. So 10:06, which is right here, as soon as it broke lower day, I grabbed puts. I grabbed the 68.90 puts at 620, and they went from 620 to 740. Didn't really go that far, but it is what it is. And then I took puts at 10:49, which is right here. Now, I remember this play. I took it right underneath the 687.50 because at this point we did not break pre-market low, which is right over here. Because we did not break pre-market low, we came back up. My my mind was set that we're going to be in a range. Now, range days, they want you to buy calls at lower day and they want you to buy puts at higher day. And I do not like doing that because buying puts at higher day, market loves to rip. You buy calls at lower day, the market will do a liquidity sweep and just dump it 50 cents to $1, just enough to get you in and take your money and stop you out. I do not like doing stuff like that. So when I think we're going to have a range day, what I do is I look for mid-range plays because to me that's safer. I mean, you still can get easily taken out, but I mean, mid-range plays are definitely the safest way to go. And so I was looking at the body of this candle, the body of this candle. You know, it's acting as support, rate. Sorry, not support, but you can see like a little line right here where it tried to have support, it bounced up, then it came back down and tried to act as resistance, and it came down a little bit and it came back up. But they're all lining up. These four candles are all lining up right at the 687.50 area. So I was like, okay, we break that, we're going to end up dumping to maybe lower day. So that's what I did. I took it took the 6,900 puts at 620, and they went from 620 to 980. So, I mean, theoretically, if I didn't trade anymore that day, but if I did, I would, look for things like this right here. You got these two candles lining up. I would take calls over that because they're lining up, or because it rejected right here, right underneath the 687.25. I look for mid-range plays, and this came up mid-range. It turned around, came back, and stayed above this area of 687, like 686.75-ish area. So then it made an inverted head and shoulders. I mean, so because it turned here and turned here, I mean, calls up here would be good, but puts right here would be good too, because you didn't know it was going to bounce here. But seeing it reject to VWAP and coming back down, this is a mid-range play. So now I took puts here and I took that play. Now, if for some reason, if it didn't work out, I mean, I might have taken calls up here. In fact, I think I might have called for calls at over 688 too at the time. I'm not quite sure, but I remember one of the days this week I called in both directions because I wasn't sure which way it would go, but I'm not sure if that was the area or not. But anyways, what the point I'm trying to drive home is, if you think it's a range play, look for setups mid-range. Don't try to cherry pick the top or assume that it's going to drop, or try to pick the bottom and assume that the bottom's going to hold, because I don't like doing that, because when they rage, they rip it or they dump it, they flush it hard, and I do not like doing that. So to me, mid-range plays are the safer route, and that's what I prefer to do. But you can do what you want, but me, that's what I prefer to do. Now on the 29th, sorry, 30th, we had FOMC, which was a really dead FOMC. On the 30th, this is SPY calls over 688.50, which is up here, rounded up. Why did I round up? 688.50. Yeah, probably because this high, the previous day's high. So, yeah. And I took calls at 9:49. See, this is the opening candle right here. This is what SPY loves to do. It will put in a red candle, make new lower day, rip the other way. And SPY just loves to do that. So I don't like that. I love playing the put side. I love playing the short side because they're so violent. But at open, they are a trap. So when it came down, made new low day, it quickly came back up. As soon as it took higher day, I took calls. I took the 69.10 calls at 770, and they went from 770 to 1070 on that play right there. Then look what it did. It dumped to lower day. I took puts at 1010. So I'm gonna assume I got it right here, right underneath the bodies of these candles. You get underneath 687.35, because you get the bodies of these candles. I would not have taken it lower day. I would have taken it right here at the bodies, because assuming, I mean, to me lately, if you take calls at lower day, this is the bullshit that happens. It makes new lower day, it rips the other way, comes down, makes new lower day, rips the other way. I mean, buying puts at lower day has been so dangerous because SPY has been doing that. They've been doing liquidity sweeps at the lower day. And to me, I don't like playing puts lower day, especially when the market's going sideways, but I just haven't been doing well with those. So when I see mid-range plays like this come up, I do take it. So I did take the 6,900 puts at 750, and I went from 750 to 1140 right there. So good play, worked out really well. Then I sat out. I don't usually take too many plays before FOMC, but I will on days that there's no Powell. I don't know, for some reason it's not as expensive. One of the days, well, when Powell speaks, which wasn't this FOMC, but when he normally does speak, SPX is so expensive, it's not worth it, and the market's usually choppy, so I usually sit out. And on non-Powell days, on FOMC days, minutes, I usually, sometimes I'll sit out, sometimes I'll play it. It depends on what the market action is, but we were very volatile, so I'm glad I played that. So I did play it. And of course, we got all this violence right here, volatility right here before noontime. Then as we get into 2 o'clock, it does nothing but chop. And I'm glad I didn't play anymore because this is a nuisance. And 2 o'clock is right here. This is the FOMC candle. So pathetic. I mean, even for a minute, we usually get a dollar or two move, and we only moved 40 cents. That was the most pathetic FOMC I think I've ever seen. But anyways, I had the 69.05 puts at 480, and I had the 69.05 calls at 410. But I bought them up at 120, 125, which is right here when it pulled back. And when it pulled back, I sold a majority of my calls on the bounce right here, and then the puts went from what, 480 to 530 right there, and the calls came back up and they went to 520. So yeah, I sold them up here, and then I sold them again over here when they broke even or came close to even. So yeah, it was pretty pathetic on that play on FOMC day. So now on to New Year's Eve. I said SPY puts under 686.50, which is right 686.50, right? Yeah, right here from the huge, not a huge, but a pretty good sized gap up. I took puts at 1010, which is right here. I didn't touch this. It bounced a little bit, but when it broke the three candles right here all lined up, as soon as it broke the 685.50 area, I think I took it right at the 50. I took the 68.70 puts at 610, and they went from 610 to 850 right there. So that ended up being a good play. Then I took puts again at 1256, which is right, what time? 1256, right here. I think I took it right here underneath these 585 area. Get all these candles clustered together. You get the body, and you get the bodies and wicks of these candles, and it rejecting the 20 EMA. So when it came back down, I think I actually took it like at 684.90. It was 685, right around in there anyways. I took them 68.70 puts at $3. Let's see, 1286. Oh, actually, no, I took it right here. I took it right down here because this is the one I took a loss on because I had it at 540 and it's stopping. Okay, I remember this play. I took it on the bodies of these candles, not these ones. These two right here. And as soon as I got in, then went the other way, and I should have known that they were going to rip it through VWAP. I mean, but I wasn't quite sure. But yeah, anyways, I mean, it came up to VWAP, rejected, came up again, rejected the 20 EMA. So when it came back down, it got onto these candles again. I thought for sure we were going to see lower day, but it didn't. We ripped the other way and ended up stopping out. But then I grabbed calls at 322. I remember this because I was surprised. We were having a pretty good sized dump. We went from 686 to 682, 683. We had a $3.50 drop in half an hour. So I was like, okay, if we're dropping now, we're probably gonna pop on the last 10 minutes. So because we were oversold right here, I took a chance. I mean, I grabbed calls. I grabbed the 68.60 calls at 4:30, and I was actually gonna grab calls because we were so selling off. And if we kept dumping, I was just going to use that as for the end of the year strangle, which is what I was planning on doing the last 10 minutes, grabbing a strangle the last 10 minutes. But because we sold off, I took calls, and those 68.60 calls went from 4:30 to 7:30. So to me, I took it, and I told the room that if it popped, I was going to take it, and I did. And if it came back down, I would just reload, and that's what I ended up doing. I ended up reloading. I reloaded but I didn't get the same 68.60 calls. I got closer to the money. I got the 68.55 puts at 230. Then I got the 68.65 calls at 260. And the calls didn't go anywhere. They ended up going to zero. And then the puts went from 230 to 1130. So they went 300% on that play right there. I didn't want to miss that. I mean, it was I didn't think we were even going to get a play, but this candle right here happened like the last 2 or 3 minutes of the day. So they really, really waited till the end of last minute to do this dump. So I was kind of surprised. I didn't think we were going to get anything. I mean, if you look down to the 1 minute on this, on that day, well, let's see. Yeah, see 1556, and still right here. See, this is right here, 1558. Literally the last 2 minutes of the day. That's where it made the dump right there. So they really waited till the last minute to do that. So then on the second, I said traded ears room. I said SPY puts in a 685, which is right here. Pre-market low from over here. We had a huge gap up. I think it was tariff news or a rebalance. So I don't remember what it was, but we closed New Year's Eve Wednesday at 681, 70-ish, and we gapped up all the way to 685. So we gapped up like $4 or $5, and we had that, like what I was saying earlier, when we have these monster gap ups, I'm looking at dumps at open. And this is exactly what happened. You know, they dumped it at open, and they tried to run it a little more, then they dumped it. But yeah, I was looking at the dump. As soon as it broke 685, I grabbed puts right at 932, right at open. Right when it broke to 685, I grabbed the puts at 68.65, puts at 820. And they went from 820 to 1130 right there. And of course, look at what they did right here. If you grab the ORB play, grabbed a ORB play, when it made new lower day, it really ripped it the other way. This is what I've been talking about all the entire video, is that as soon as these lower days, they end up breaking just enough to get you in and rip the other way. SPY's been doing that all the time. I do not trust lower day plays. I just don't. But I did take calls at 1031, which is right over here, and luckily my lines are still there because it's the weekend. But this white line is previous day's close, and the red line is previous day's low. I didn't take calls up here. I just waited, but I didn't, like I said, I didn't feel comfortable taking puts down here. Plus this is from 686 to, this is a $2 candle, and that's not even the full candle, that's just a lower day. It went almost $2.50 on one 10-minute candle. Usually when you have candles this big, they don't have continuation, so I'm sketched out by them, so I ignore them. And then it went from another $2, but down here I caught the knife. Well, the reason I caught the knife was we had previous day's close and previous lower day right here together, and my assumption was as soon as we got to them, we were gonna bounce hard. So I grabbed the 68.65 calls at 650, and they went from 650 to 11. Got up the VWAP, rejected, made new lower day. But I grabbed puts. What time? 12:49. Right here. Not quite sure where I grabbed it. I don't think I would have grabbed it down here. I think I grabbed it underneath 680. 681.50. You got the bodies of these three candles, and you got the wick touching right there. You get a pivot right here. You see this was a pretty important number, 681.45, because it bounced off it, rejected it, and then it, it's the same thing over here. But yeah, when it got back down to 681.50, that's when I took puts. I didn't want to take it down here near lower day, because look, it makes new lower day and rips the other way. I mean, new lower day rips, new lower day rips. I mean, it just, lower day is just nothing but traps. So I looked for mid-range plays. I think it was the 681.50 is where I grabbed it. I grabbed the 68.35 puts at 770, and they went from 770 to 910 right there. So that ended up being a good play, and that's all I want to play. I had 3 good winners, and I'm not going to play anymore. And Spies has been playing a lot of games. You just got to adapt to them, understand what the games are, and adjust to them. So the games this past month or two is the lower day trap. So that's going to do it for the recap, and thanks for watching.